Welcome to the closing beat, everybody. Happy Thursday to you. Hi. How's everybody doing out there today? Hope you're having a good day. Welcome to our show. We are financial advisors here at Jazz Wealth. Give us a call. Go to the website, schedule a call. We are, I think, the only advisor that does not have a sales pitch. We were talking about that. We'll eventually come up with one, but we don't have one. Just call and see if we're a good fit. You can schedule a call and chat with us or join us on the website, jazzwealth.com. While other advisors are playing checkers, we are playing chess, and tonight we're going to play some chess in our Wine and Wealth class. Every Thursday, we do a class for clients live in our own portal. Tonight, we're going to talk about tax reduction strategies in retirement because I've about had it with these darn taxes, right? And that's my serious face. We get serious for a moment? Right? And that's where I stand on that one. The stupid debate. I watched a little of the debate and it was like, okay, well, they're just talking about spending a lot of money. Somebody got to pay for that. So I want to make sure that all of our clients have not only the strategies through life, but as you get into retirement, we don't give up there, right? Tax savings is a form of a return. So we're going to cover that tonight on Wine and Wealth. All right, so there's a lot going on. We talked about this in the show yesterday, that there's no reason for a really, really big rally to finish out the week. What did we get today? A little bit, right? A little bit, back and forth, kind of with a small positive day there. It's so cool when you can see that ahead of time and you stay connected enough to the markets and really kind of study how things go. It's kind of my passion. But again, why would anybody be a strong buyer? Generally speaking, economic news here today was pretty good. As far as market rally type economic news, GDP growth numbers came in at 2.1. They didn't adjust them there. Weakness, maybe the personal consumption category was cut in half, right? So apparently we're spending less there. Personal savings rate, okay, that's not so good either. Jobless claims, things like that. But much of today's data that came out was either from August or even worse, from April, right? We're talking about the second quarter numbers. We're not talking about right now. So there's much that could change inside of there, though. And of course, you have your government shutdown and all that stuff. So you have a recipe for people to say, okay, not now. I see we're discounted. I might nibble a little bit, but I'm not going to go in and just go gangbusters and just buy everything all in one shot. All throughout the week. I've been doing that for clients too. Like, hey, we'll buy a little bit. All right, we'll buy a little bit more. We'll use up a little cash, but we're not going full gangbusters on one day and just assuming that by Friday, everything's going to be good again. By the way, best analogy that I saw, I wish I saved his name. It's from Barron's. So whoever wrote this for Barron's, great analogy. How the government shutdown, I've been saying this, won't really be a big impact on the stock market initially, right? Because the idea of this happening is already priced in. We're fine with that. I don't know if we're fine with that, but we know that it's a possibility, a strong possibility. But the best analogy was, so the dollars that they're fighting about are next to nothing compared to the problems that we have, the dollars that they need to focus on. So their argument was, it's like canceling one of your streaming services when you have a lease for a Mercedes-Benz that you can't afford, right? Really, really cool the way that came out there. So I don't remember his name, but that was cool. If you look on Barron's or whatever they do there, just someone sent it to me. Anyways, so what do we have going forward for the S&P anyways? We've got our nice little pullback. Remember, everything is oversold, or at least was oversold. So any little bump in that, those bigger tech stocks, any little bump across any industry or sectors or anything like that is going to be a recipe for at least a short-term bounce. However, that bounce has a cap on it because there's no reason for people to want to be invested heavily ahead of the government shutdown and everything else that's going on in the world. So that's what you got going on there. Today, we saw a continuation bounce from last, after 2 o'clock yesterday. The market started coming off the lows. Today was just kind of a continuation of that, just like we talked about, no major rally and everything. 30% of the S&P weighting, the market cap of the S&P, actually went down. Right? So it wasn't like a full across-the-board type rally here today. I'll just point out a couple things. Utilities. So utilities is the fastest declining sector. I don't know how to say it, meaning it was up about 2 or 3% this month, and now it's down about 8%. So we've got that spread, right? Big, quick rally. Now, culprits today on that would be like Nextera. You see Nextera just falling apart there, getting a handful of downgrades there after cutting their outlook. And so, like I said, the utility sector, if you're looking for the most discounted in the short-term sector. That I don't know that that's the best pick, but that is the one, down 11% from its highs so far this month. Energy. Love to say there was more here, but, just a little bit of a pullback in oil. Energy stocks mostly held up thanks to a late day kind of a rally there. ExxonMobil was the leader in that late day rally. See it right there? So it was down, and then right in the afternoon started sucking itself back up. Well, that's a big weighting in the energy sector there. And so they had a big, at least a big attempt back towards getting positive. A slight positive day, right? Look at healthcare. Still kind of split overall. If you look at the healthcare sector, all the stocks that are inside of it there, a couple things that stuck out is just I was kind of just floating around looking at ideas here today. Someone mentioned Dexcom the other day, so I thought, well, let's see what that's doing. A little bit of a recovery there. That took Abbott Labs and some of the others with it. Remember, their competitors or their peers, I should say, in the industry took a lot of that with it. So you might have noticed across the board, anything that falls in that same category, had a good day, right? UNH. One of the bigger names in there, and of course, bigger name in the Dow. Again, hinting at that breakout there. See what we're looking at? Right there. I don't know if it's the best one ever, but at least it's hinting at it for the moment. And so when you look at healthcare as a whole, just a slight rally. One of the more oversold sectors in the S&P there. Crude oil pulled back just a little bit here today after yesterday's monster rally there. So thankfully, for the moment, we don't have $100 a barrel oil, but nonetheless, that's where it's at. Gold, if you like anything in that category, discounted there. It's not one of my favorite areas, but anything that's related to the physical price of gold or gold miners, GDX being an ETF you can use to track that, decent day. And also, after a weak start, right? A little recovery off the lows in interest rates. And I would say it the other way around, right? So interest rates came down just a little bit today because prices moved just a little higher. The 10-year at one point hit 4.64%. It did recover a little bit. The national average for a 30-year mortgage getting close to 7.5%. Okay, that's a little bit high. So are house prices going up? And will they keep going up? Well, we have data on that, actually. Let's take a look. Let's go over here. Here's the latest home price data that you can take a look at. This is Case-Shiller's data. This is not mine. I did not get this together. So if you look across here, we have the, obviously the region, city in particular. We have month-over-month change, just so you can see compared to last month, what happened. We have year-over-year change, just if you're more longer term. We usually do that with stocks as well. And then we put in since COVID. Right? So since we said, here's COVID, was a big deal, what's the change since then? Those are impressive numbers there. And then the other part that we did is there are 10 names here that have officially hit new highs, meaning that when we went in, we were just trudging along, the market was doing really well, home prices were doing well. Then we hit COVID, and that was the peak right there. Well, that was the highest prices for homes. So using that as our benchmark, we go, okay, there are 10 cities here that hit new highs. Month-over-month changes, everybody's looking pretty good there. 19 of 20 names actually showing gains there. Portland, that is the only place that saw prices actually move lower. If you use the national average, a slight uptick month-over-month, just over 0.5%, and about 1% year-over-year growth on home prices, though you could quickly see, right, there are some areas just killing it here. Where's Tampa? So a little decline year over year, 67% gains. I can attest to that. My house is up very close to 100% in our neighborhood since we bought it just before, like during COVID when things fell apart there. So yeah, that's pretty accurate for those Tampa numbers. I won't disagree with you there. And really the only interesting things there would be some of these areas that are still a little bit weak. Portland, Phoenix, Las Vegas, although Las Vegas had the biggest gain, right? 1.12% month over month. They've got a ways to go, still 7% down from their highs. San Francisco, Seattle, some of these tougher areas in terms of recovery, working on it, And I hear a lot of things about Dallas, home prices there, and obviously they're higher, but still got a ways to go there. So I thought that was interesting. Just something to take a look at in an otherwise day where, we're not expecting blast off fireworks type market activity. And tomorrow is the same thing. Slight up, slight down, something like that. All right, moving on. Let's take a look at some of the stocks in the news, and then I'll get ready for the wine and wealth here. I'll take your questions. Not every day you open up your portfolio and find that you have a stock that's up 63%. We happen to own this one here. This is Chico's Fast. Really cool company, actually. I'm more familiar with it because the people that founded this company are from Fort Myers, and I was from Fort Myers there. It's being bought out by for $1 billion by Sycamore Partners. If you're familiar with them, they are, I don't know why, but they're kind of more focused on that retail space. They're going ahead and buying them out for $7.60 a share. I wish we owned more of it, but we do not. Really cool story. If you ever want to see like a timeline of how these people grew their business since like the mid 80s. I don't know exactly, but somewhere in the mid 80s, I remember seeing their names pop up. Really, really cool. It's kind of like it was a husband and wife that started it. Really, the wife was the focus there. And one of their initial things, I don't know if this is where I saw this documentary or something, they just said, we're open. They got their first little store somewhere in Fort Myers, Sanibel Island, I think. They said, we're going to open a store, and we need the sales, so we're just not going to close until we get sales, right? So every day we've got to have sales to make our money. And if we don't get them, we're going to just stay until we get them. And they would have like friends come by and be like, go home. I'm going to buy something so you can go home. And that was how hard they worked at this. So I love seeing stories like that. They are in the news. And of course, they're going to be a private company after this. They'll get absorbed into Sycamore Partners. It will no longer be a symbol that trades. If you're with us and you own it in your portfolio here at Jazz, it'll just disappear one day. The cash will replace the stock price and we'll reinvest the cash. So it should be about the first quarter of 2024. This is a pretty simple transaction, so I don't think it'll be drawn out or anything. Coty, we talked about this yesterday. They were going to dilute you in terms of shares. They did that today, 33 million shares at $10.80. So I just wanted to follow up and keep up with that data that we talked about. Peloton, not merging with, not buying out, not being bought out. They're just going to collaborate with Lululemon, right? So they're going to change some of their subscription services. They're going to integrate some of their clothing to be the sort of co-branded, I guess. We'll see how that goes, but that was the big news for them yesterday and, of course, today as well. Oh, type it in the right spot, Dustin. See what I'm saying? All right, Workday. Workday... What was it down? It was down over 10% at one point, but they were also part of the afternoon rally there. Total subscription growth outlook was the focus today. They came out and said, nope, not going to be so good. We don't have as many people signing up for this. Their analytics and data service that they have there for companies that are bigger than ours, because seems complicated. CarMax also, we talked about them reporting earnings. Everything was basically in line for them. Sales overall just a little bit lower, and price per car. So, they're kind of a fixed price model. Price per car or margins per car just a tiny, tiny bit lower. They missed the mark on that one. And then Micron. So Micron comes out with earnings a little bit lower than expected there. Revenues basically as expected, within probably enough that wouldn't have caused this move. However, almost 70% of their total revenues come from DRAM, right? That's that's one of their primary focus there. That was down 43% year over year. Higher costs were what they said. These are not my opinions. Higher costs, what they said, continues to weigh on their margins. And because of that and their future growth, that what we're seeing kind of come back in, they commented about free cash flow being negative for, just by a couple $2 billion. Nothing too crazy there. Tomorrow we have Carnival Cruise reporting earnings there. Norwegian Cruise and the cruise lines have done well recently, but Carnival Cruise will come out and report how much they're charging for their cruises. It's a lot, just so you know. It's a lot. Also, our Jazz After Dark. If you're not a client, you can't make it to Wine and Wealth, that's a shame. You should join us. jazzwealth.com, transfer an account, roll over an old 401k, something like that. But if you can't make it, we're going to talk tonight on the Jazz After Dark, which is public, and on our YouTube channel about being more strategic with your Roth IRA. You got to be more strategic. I'm going to focus more on taxes and how we can take advantage of these things, smartly, instead of just saying, I'm going to use a Roth IRA, and that's just how it's going to go. Now, we could be a little bit smarter with that, huh? All right, let's see if you have any questions. I will answer your questions. Do we have a leaderboard? Am I supposed to?
We do. Yeah, we do.
Okay, well, let's just go on over there. Yep. There you go. What do we got?
There's your leaderboard. We got Linda, Silk, Lene, Bruce, and Ron. Those are your top 5 for your second to last day of the week. jazzwealth.com/guess the Dow for your chance to win $100. That's it. I was trying to go somewhere with that.
Made that sound exciting.
Yeah.
Didn't it? $100. So we need a little pullback to help Bruce out there. And of course, Silk is probably just going to get it anyways. Very, very cool there. So congratulations. If you are in the top of the leaderboard there, you guys need just like a little pullback. That's all you're asking for, is just a little bit of a pullback there. We'll see what tomorrow has, right? We will see. Okay, let's take your questions if you have any there. Still affordable in Wisconsin. Your second part is the key to that question. Still affordable in Wisconsin. I don't like my lakes freezing over. This just looks weird. You know what I mean? It's just not something I can deal with. Yeah. Opinion on Albemarle. News working with Caterpillar out of the former today. I think that is a bottom for Albemarle there. So this is going to, you've asked a few of these. This is going to go back to the exact same thing that I would have done before. I like it. It goes on a radar. We already own it, but it goes on a radar to go, okay, do we want to increase the position? Do we want to, have, 1.5% of that portfolio or whatever? Not today. I don't like that. I'm not that risky there. I would wait for it to rally, see what happens from there, maybe catch the next pullback. That's just me. If you're more of an aggressive person, you look at that and say, we haven't seen one of those days in a while, off of a bottom with good volume there and a little news. Yeah, take my shot. So I could see, it just depends on your risk tolerance. You know what I mean? Pandemonium says, just switched last month to 60-40 regular Roth split. Oh, dollar-wise is 60% into the pre-tax, 40% into the Roth. Now, great. Okay, so a little extra thought went into that. I could tell. How'd you come up with 60-40? Why wasn't it 50-50? Why wasn't it 40-60, right? Like, how did we come to 60-40? That's what I'm looking at there. Some low numbers in the guess the Dow. Yeah, some good guesses, actually. Yeah. Would you rather be a dragonfly or a lightning bug? We're doing something wrong here, if that's the question. Oh. No predictions on the data for tomorrow. And just because I didn't look, I like doing those things. I just didn't look. Thank you, Kevin. Pandemonium says tax break. So what does that mean? Because your income, did you calculate your income and figure, okay, if I do this, I'll still get the tax break now and I'll still make the most of it in the future. And you can't contribute to a Roth outside of a 401k. That answers some questions there. So yes, you can, but that answers some questions about that 40%. So I don't think you thought through that one all the way, because if you can't, because of your income, you gave away a little bit there, then I don't know about that 40%. But I like that you're thinking. That's all I'm trying to do right there. If I can get every one of you to think like one extra layer deeper. Don't just put your money in stuff and walk away. Come on. You could do better than that. All right, I'm going to wrap it up there. Get ready for our Wine of Wealth here tonight. I hope you'll join us. We're going to talk about tax reduction strategies. We're going to be using Nest Egg, going through some examples to kind of show and get our clients to think. And if they think about it and they go, I don't know the answer, that's what we're here for. All right, enjoy the rest of your evening, and thanks for watching. Appreciate it. Did I get everything? Good? Okay, yeah, that's it. See ya.